In a time where monthly dividends have become the norm, Roundhill gave us 3 ETFs that pay weekly. Are they worth buying? Let's find out. This video is not financial advice, nor is it a recommendation. Please do your own due diligence before investing into anything. Roundhill's 3 weekly paying ETFs each trade against a particular index. QDTE trades against the NASDAQ, XDTE trades against the S&P 500, and their newest ETF, RDTE, trades against the Russell 2000. When you invest cash in these ETFs, Roundhill buys shares of FGXXX, a mutual fund that holds cash and treasuries, and some deep-in-the-money call options against their respective index for expirations far in the future. To give you an idea just how far out we're talking, as of September 13th, QDTE's earliest expiring call is for March 21st, 2025. Then, every trading day, these ETFs write and sell an out-of-the-money 0 days to expiration call against the index, covered by their deep-in-the-money calls they purchased. The premium income from selling these calls is what pays for the weekly dividend and their 0.95% expense ratio. I know weekly dividends sound great to those looking to replace their income, but we should make sure this isn't too good to be true before putting our eggs in this basket. Choosing to buy deep-in-the-money call options allows that contract to retain an amount of intrinsic value the whole time until expiration, since it's always in the money. It also allows them to exercise the contract at any time if needed, potentially at a net profit. Ideally, if they can sell enough 0DTE contracts that expire worthless, the premiums from those sold contracts can make back what they spent on their purchase calls, and possibly increase net profits if and when they sell or assign the contract they purchased prior to expiration. The risk, however, is in the event the index crashes below the strike price of their purchased call option. While they do choose deep-in-the-money calls, and that should give them a buffer against drops in the market, there is a possibility the market tanks low enough to put their contract out of the money, which severely erodes the value of that contract. Since their holdings, which contribute to the NAV, consist only of those deep-in-the-money calls and their shares of FGXXX, a noticeable drop in the value of those calls would be a big hit to the NAV of these ETFs. Are you buying any of these Roundhill ETFs? If so, which ones and why? If you like this video, you might also enjoy this one here on the screen. Subscribe to join the Cash Flow Club and hit the bell for notifications so you don't miss a single video.